Viewers, I'm very happy to introduce myself. I'm Mr. D.Arabindu Kasali, Associate Professor in the Department of Commerce and Management, Maharani's Commerce and Management College for Women, Mysore. Uh, Really, this is an interesting opportunity to present a topic related to integrated accounting system. The topic of second sem become cost accounting, and this topic includes the contents related to the introductory aspects, meaning, advantages, objectives, features, principles, that is integrated accounting principles, special essential features, subsidiary ledgers, and control accounts. After that, we have to discuss various journal entries relating to material, labor, direct expenses, overheads, and journal entries relating to other transactions. And then we have to conclude the topic. Come to the introductory aspects. In PU, we have studied the accounting systems related to recording of business transactions, that is single entry system and double entry system. And after that, we have also studied accounting systems related to recognition of profit, that is cash system of accounting, mercantile system, and hybrid system of accounting. Now it is the time to study the accounting systems relating to maintenance of books of accounts. One is integrated accounting system and another one is non-integrated accounting system. However, we are particularly concerned with only the integral accounting system. Yes friends, as you know already, financial accounting and cost accounting are the branches of accounting. If both accounts are separately maintained, it is non-integral accounting. If both are merged, integrated, then it becomes integrated accounting system. Integrated accounting system is a common accounting system in which financial and cost accounting are merged and maintained together. In other words, as per ICMA London, it is a system of one set of books of accounts which provides both financial and cost accounting information. And these are just two definitions related to integrated accounting system. Come to the next aspect, advantages, and we can also say that objectives and features. There are many advantages related to integrated accounting system. First of all, one accounts department, only single accounting department, and single set of books of accounts, common accounting staff, and here no duplication of work, no need to reconcile both financial profit and cost profit, and more than that, economy, that is cost effectiveness, easy and quick reference, minimization of errors and frauds, better coordination between two accounting systems, and this system supports mechanization and computerization of accounting process. And another one advantage, we can say better and quick accounting decision is possible, better comparison, better control of accounts, etc. is possible, and automatically it is so useful for management accounting, since both financial accounting and cost accounting are integrated together. It results for a better management accounting information and to perform management accounting day-to-day functions and decision making process. And next we have to discuss the various principles that are associated with integrated accounting system. These principles, one by one, we can discuss. The first one is the degree of integration. To what extent there is an integration? There is an integration between a merger, that is a merger of financial accounting and cost accounting. To what extent? Is it 100% or is it 60%, 70% integration? Generally, it depends on the organizational accounting policy. And then the next principle is principle of coordination between the financial accounting as well as cost accounting aspects. We have to decide the principle of coordination. Next, principle of commonness, the commonness between financial accounting as well as cost accounting. Next principle, professional knowledge and skill. Okay, both financial accounting and cost accounting, they do need the professional knowledge, skill, ability and application for better performance, and for that purpose we have to decide the principle of professional knowledge and skill. Next principle is related to the controllability aspect, or control accounts relating to both systems. And next we have to discuss the principle of non-cost items. Non-cost items are those items, as you know already, which are purely financial in nature, and non-cost items are not to be considered in cost accounting, and a principle for that purpose is to be decided. And next principle is related to the well-defined procedures, practices of both financial accounting as well as cost accounting, that is integrated accounting system. Then we have to know the principle of prescribed set of books of accounts, forms, vouchers, documents, etc. And there onwards we have to consider the principle of accounting authority and responsibility. These principles are just for the time being, and we can add few more principles also. And then we have to move towards the next aspect, the special or essential features of integrated accounting system. Main ledger is a general ledger which includes simple accounts as well as control accounts. And main ledger controls all subsidiary ledgers which are related to stores, work in progress and for finished goods. Accounts for non-cost items are also opened. And next, the personal and real accounts are maintained in general ledger. Transactions of stores are recorded in stores control account. Transactions of wages are recorded in wage control accounts. And transactions of overheads are recorded in overhead control accounts. Totals of these control accounts are transferred to work in progress account. Over and under absorption of overheads balances are to be transferred to P and L account. And these are the special or essential features of integrated accounting. Under integrated accounting system, we have to maintain various books of account. General ledger is a main ledger, and then we have to maintain various subsidiary ledgers and also various control accounts. Come to the various subsidiary ledgers and related control accounts. There are 6 types of ledgers we have to maintain. First one is the stores ledger. It is related to maintaining the accounts related to materials. The components of various items of materials are to be maintained in this stores ledger, and this, for this purpose we have to open an account, stores ledger control account. The second one is sales ledger, is related to recording the sales transactions, particularly credit sales transactions are to be recorded in sales ledger, and also a sales ledger control account is to be opened. Come to the next one, number 3, purchase ledger. It is for recording credit purchase transactions, and we have to open a purchase ledger control account. The fourth one is stock ledger, which are related to finished goods, and for this purpose we have to open stock ledger control account. The fifth one is work in progress or job ledger. It is for the various jobs undertaken and which are undergoing in our production department, and for this purpose work in progress control account is to be maintained. And last ledger, expenses ledger. Expenses ledger is concerned with recording factory overheads, and for this purpose factory overhead control account is opened. And for administrative overheads control account is to be maintained. For selling and distribution overheads, selling and distribution control account is to be maintained. And after this we have to study the various journal entries related to integrated accounting system. Particularly, first one, journal entries relating to material. There are a number of journal entries to be passed for materials are concerned. So, journal entries relating to materials. Number 1, purchase of materials, either for cash or credit. The journal entry, stores ledger control account debited to cash or bank account or sundry creditors account. Second journal entry, for purchase of materials for a special job, that is work in progress control account debited to cash account or bank account or sundry creditors account. Third one, direct materials issued to production. The journal entry is work in progress control account debited to stores ledger control account. Fourth one is for indirect materials issued to production. Then the journal entry for this transaction, factory overhead ledger control account or office ledger control account or selling and distribution overhead ledger control account is to be debited to stores ledger control account. The fifth one is related to materials returned to supplier. For this purpose, the journal entry is to be passed creditors account debited to sundry creditors account debited to stores ledger control account. Sixth one, direct materials returned to stores. The journal entry for this transaction, stores ledger control account debited to work in progress control account. Seventh one, indirect materials returned to stores. The journal entry, stores ledger control account debited to factory overhead ledger control account ಅಥವಾ office overhead ledger control account or selling and distribution overheads ledger control account, as the case may be. And the last journal entry relating to material is materials transferred from one job to another job. In this case, no entry is to be passed. So these are 8 journal entries or 8 transactions and journal entries, concerned journal entries to be passed. And next journal entries are concerned with the journal entries related to labor. When wages paid or payable, the journal entries, wages control account debited to cash or bank account or outstanding wages account. Second journal entry, direct wages allocated to production. The journal entry, work in progress control account debited to wages control account. The journal entry relating to indirect wages allocated to production, administration, selling and distribution. We can pass factory overhead control account debited अथवा office overhead control account debited or selling and distribution overhead control account debited to wages control account. Then we have to come to know the journal entries related to direct expenses. Direct expenses paid or payable. The journal entry, work in progress control account debited to cash or bank account or to outstanding expenses account if outstanding expenses are payable. Then the journal entries relating to overheads. Number 1, overheads paid or payable. The journal entry, concerned overhead control account debited to cash or bank account or to outstanding overheads account. The second one, overheads recovered, work in progress account debited, that is factory overheads, finished goods control account debited for office overheads, total cost account debited for selling and distribution overhead to overheads control account. Third one, under absorption of overheads. The journal entry for under absorption of overhead, P&L account or overheads adjustment account debited to overheads control account. And similarly, journal entry for over absorption of overheads, concerned overheads control account debited to P&L account or overheads adjustment account. And similarly, we have to know various journal entries for other transactions also. Number 1, production of finished goods at cost. The journal entry is finished stock control account debited to work in progress control account. The second journal entry, cost of finished goods sold. The journal entry, cost of sales account debited to finished stock control account. Third journal entry for goods sold for cash or credit. Here cash comes, therefore cash or bank account debited. Sundry debtors account debited for credit sales to sales account. Fourth journal entry is related to sales return. The journal entry is sales account debited to sales account debited to sundry debtors account. Fifth one for capital work, sundry assets account debited to work in progress accounts. The sixth journal entry is related to repairs, concerned overheads control account debited to work in progress control account. The last journal entry, abnormal loss, that is abnormal waste, abnormal scrap, etc. For this purpose, the journal entry is profit and loss account debited to work in progress control account. These are various journal entries to be passed in case of integrated accounting system. Once again to repeat, journal entries relating to materials, journal entries relating to labor, journal entries relating to direct expenses, and journal entries related to various overheads, and journal entries related to other transactions. Now it is the time to conclude the integrated accounting system. Nowadays, integrated accounting system is gaining popularity and wider application, particularly in case of corporate sector. Multinational companies, big business houses, they are widely using the integrated accounting system. Many softwares on this integrated accounting system made available, and they are so convenient, easier, and also so popular. They are very useful for maintaining books of accounts related to both the financial accounting and cost accounting and the integrated accounting system. And once again, I use this opportunity to thank the Department of Collegiate Education, Government of Karnataka, and all the staff members, the principal, the head of the Department of Commerce and Management, and all my colleagues for giving me this opportunity. Thank you one and all.